Good morning, everyone. It's Dan Basse here on Monday, the 15th of September. Ben is unable to join us today, so I will do this single-handedly. Bear with me, but we have interesting markets. Of course, we had the USDA crop report out on Friday. That report at face value was slightly bearish on the supplies that were available. However, the market rallied, and I think a lot of that rally was tied to hopeism, as I call it, due to U.S.-China trade talks this week. Of course, a lowering of interest rates by the U.S. Central Bank, and probably looking forward, maybe the opportunity or possibility of a reduction in U.S. corn and soybean yields. Now, yields are early days. We're only into the, somewhere around 7 to 9% cut across the United States. We are getting yield reports. They're varied, but in general, they're improving. And so I think that's a tone that I would lead into this report and kind of highlight what we think is going on. So this morning, U.S. President Trump tweeted out that indeed there's progress to be made in the trade meetings in Madrid. China and the United States have been meeting for the last couple of days. Trump tweets out and says that, indeed, the trade talks have gone very well. They'll be concluding shortly. I'm not quite sure what that means, but normally when trade talks that are scheduled for 4 days that end shortly, that's not a good sign. He mentions TikTok in terms of the young folks looking forward to maybe something in the news there. And he will be talking to Xi on Friday, Chinese President Xi. So as I looked at this, there was no indication of lower tariffs. What I'm hearing in the background on U.S.-China in terms of soybean purchases is that the Chinese are asking the United States to drop to 20% fentanyl tariffs before they will return to the table and be a buyer. None of that was mentioned here. Now, whether or not that will be discussed on Friday, I think is a very important question to be pondering. The market will, of course, be reluctant to probably break too far, but I'm disappointed that soybeans were not part of the announcement like TikTok here this morning. We'll see how the market really handles this. But if we don't get a U.S.-China deal or get China to buy U.S. soybeans rather quickly here, it's going to be very, very important for reasons I'll discuss as we look forward here. As we think about, what's to come here and we look forward, I've used two graphics. I gave you one graphic to the left. This is Chinese purchases to date. We know it's at zero. So as we look backwards in time, all the way to 1998, China's always bought something from the United States by this time frame. Even during the trade war of 2018 and 2019, the Chinese have bought U.S. soybeans. That's not the case this year. Of course, China has a 23% tariff on U.S. soybeans. So Brazilian and Argentinian soybeans are cheaper, including the tariff. And in fact, on Friday, China was said to have bought 6 cargoes of Argentinian beans for mid-November and another 4 cargoes of Brazilian beans. So we're now into the last half of November where China has some pretty reasonable coverage. Well, we should be asking ourselves, well, if China's not buying beans, what about the others? So I put this chart on your right, which is non-Chinese destinations. And they are up a little bit from last year, a couple million metric tons, but surely they do not make up the difference that China is not buying. Normally, China at this time would have somewhere around, 14 to 16 million tons of U.S. soybeans bought. They've not bought that many. So as you look at this graphic, you can kind of get an estimate of what we're losing and what's coming forward. When you look at where we should have soybean sales, and then you model it out in terms of what it means for annual exports, and again, the R squared on this is only 0.61. We're in the opening days of the crop year. But anyway, if you look at what we've sold to date, somewhere, in the vicinity of 350 million bushels, you can see that models out to an export estimate of about 1.3 billion bushels. Ag Resources at 1.44 billion bushels. USDA's at, 1765, excuse me. And so if you 1675, excuse me. So as you look at this, you get the estimate of that. USDA's estimate is way too high. We are probably also too high at Ag Resource at 1440, but we're trying to be optimistic that maybe something will happen in terms of a U.S.-China trade deal, either now with Friday's call or maybe in late October, November when Xi and Trump hopefully will meet. If that doesn't happen, then you can see that there is still substantial risk to the downside in U.S. soybean export estimates. And, USDA could cut another 375 million bushels in terms of the U.S. soybean export estimates. So I want you to be aware of this. And this is the importance of China in terms of the overall outlook for the soybean market as we go forward. A little bit about USDA's report. As you looked at the report, pod numbers for the United States came out at a record. On an 11-state basis, they were just under the record. You can see that in your chart to your left. But I give USDA credit in terms of reducing pod weights. They learned from last year, and so they put the pod weight just above the January estimate of last year's low. Now, last year was a very similar growing season, so I'm sure USDA and their analysis division said, hey, we're going to use a pod weight not at the 5-year average, but because we haven't had rain in the last 2/3 of August and then stretching into September, we're going to use a pod weight that's very similar to last year. So my take on all of this is that if you do need to see pod numbers come down, they likely won't. Normally in the October report, pod numbers go up because USDA will count some of those top pods which fill in later stages. So pod numbers usually go up. If pod weights come down, I don't think it's going to be sizable. So maybe there's a downside of a bushel per acre in yield, but I don't think it's any more than that. And so because of that, it would be very difficult for Ag Resource to forecast a U.S. soybean yield much under 52.5 bushels an acre. In fact, we've adjusted our yield to 53, but we think that number may be a little low. If indeed you were to argue to me that pod weights will be bigger this year because of the rain in the Western Corn Belt, the plains, I could buy into that argument. So this is what we'll be talking about as we get closer to the October crop report. When you look at the U.S. corn production, it was record large. USDA again found an additional 1.4 million acres. They put the corn crop at, a record up 1.5 billion from the prior record, which is set in 2023 at 15.3 billion bushels. 16.8 billion bushels of corn is a pile. And when you really understand where that pile came from, it's because the U.S. farmer planted so many acres. FSA data confirms what USDA has put out. So I don't think there's much argument, if you will, on the acreage totals for corn going forward. 98.7 million acres is the largest seeded acreage looking backwards to the 1936. Harvested acreage are the largest since 1933. So if we apply a yield to all of this, the extra acres found not only in the month of September, that added 250 million bushels. If I go back and include what was found also in August, that adds a 650 million bushel supply to the corn market. And that's one reason why I believe that December corn will really struggle on any rally to 430 to 440 a bushel. These are the states in which corn yields went down. You see principally that many states across the central U.S., with Kentucky being the biggest because of dryness, did see lower corn yields. So corn yields in a general sense did decline, which gave us that 186.7 bushels an acre. That's a number that Ag Resource had been using coming into the report. We did see some corn yield increases in Colorado, Texas, some of the Gulf states, but in a whole, corn yields did come down, but again, not marginally so. But I think there's a lot of questions in the industry related to what they look at is ear weights. A little different than the soybeans, corn ear weights were forecast by USDA to be record large. Now, ear numbers were about the same as 2023. So when you stand back from this, it's very easy to say, well, we're not going to see those kind of ear weights. Look what happened last year. And we can make that analysis. However, I do believe that NASS did pull ears and did mechanically dry them down. Again, we don't know the percentages. We have that question into NASS today, but we'll see and come back to you in terms of what that means. Overall, we do know that the fill on corn ears was much better this year than last year by fill on the end of the cob. And so with that in mind and knowing that this crop was cool, had enjoyed cool temperatures from really about the 12th of August into about the 10th of September, it's possible that these record ear weights could be accomplished. We don't see a lot of downside in the corn ear weight, at least in the October number. If we do get it, it's probably in the January estimate. But that being said, I'm having real trouble about thinking about corn yields dropping much below 183 a bushel, and that would be the bottom of our expectations going forward. Unfortunately, that still gives us a lot of corn in end stocks, probably above 2 billion bushels in our research. So that's why, as we think about the market, it's difficult for me to see a corn rally really being sustained. As you look at major U.S. corn end stocks, corn, soybeans, and wheat, and you stack them on top of each other, notice that the cycle has changed. We're now seeing increasing stocks of grain. This started last crop year and now this crop year. And this is why I think as producers and traders, we need to be looking at selling rallies. We are not in a stocks declining situation. We are a stocks appreciation situation. That's not only globally, but also domestically. So again, as I wrap things up here, I do believe that the markets, unfortunately, are still in bearish trends. I don't see any change to that. But with these rallies, it does provide opportunities to you, the U.S. farmer, and to you in the industry. So I want you to think about the risk management profile going forward. Again, tough to get above 440 December corn or really 1080 in January soybeans. The wheat market looks sideways as the Russians are still struggling to export a sizable amount of wheat that they need to before winter. So with all that in mind, we'll watch what Trump says later this week after he has a meeting with Z. But those rally opportunities, I believe those rallies provide opportunities for you, the farmers, to sell. And again, you can always take a trial of our research here for $1 by just scanning on that QR code and getting more specifics of where we want to look at markets and what we want to do in terms of trade recommendations for speculators or farmers. With that, I want to say thank you for listening. We'll be back tomorrow. I know Ben will be joining me. I wish you a very good day. And again, good trading, but our mindset is one to sell rallies. Be well, everybody.